I wanted to start with TradingView as the first platform because for several reasons, in fact. First of all, we are working on porting over the other indicators that we couldn't develop for TradingView purely because the Pine script didn't support object and line drawing. I'm delighted to say it now does. And as a result, we've been able to bring over, we're working on bringing over all those other indicators that are not available. That's the currency matrix, which I had up last week. I'm delighted to say we've the currency array is hot off the press. I've actually got that one as well. So I've got the matrix and the array to show you, and we're obviously working on the others, the heat map, the volume point of control, and also the support and resistance indicators. So I thought we'd just start with TradingView this morning. And what we're looking at here is really just the hourly chart for the CSI. This is on the hourly time scale on this particular chart. And then on the right-hand side, we've got the dollar index. That's on the hour. You can see the weakness that we're still seeing in the dollar. It's been that way. Let's just pop that up full size. Sorry, wrong one. Let's just move that one out of the way. Let's click over onto the dollar. There we go. It's been in pretty much a downtrend for a period of price action now, and looks as though it's continuing on into the US session. We had a little bit of a bounce this morning, but it still looks pretty weak. I've also got in the middle chart here, just to get an idea on sentiment. This is on the FTSE 100, UK 100 index. And basically you can see the sort of pattern of price action that we're seeing right now. This was the London Open, a lot of volatility, huge volatility spike, and we are still trading within that range. So it's very fragile, the risk on, and indeed exactly the same applies to the US markets right now in terms of the YM, which is the Dow Jones Derivative Futures Contract, the ES, which is S&P 500, and also the NQ for the NASDAQ 100. Those charts, certainly on the daily time frame, they are looking very fragile. That's not to say we're going to see a full-blown reversal from bullish to bearish, but certainly there is the expectation of some retracement, a weakening, and a correction to the well-established longer-term trend. We've seen corrections in the past, in fairly recently, and it looks as though, certainly from a price and volume perspective, as though we're setting up for that. The volume's been falling away. Price has been flattening in that sort of curving price action where you're seeing narrowing spreads, and very much reflected here in the FTSE 100 to say today, pretty weak, just trading in a pretty narrow range, not really going anywhere, really lacking direction. So we'll just wait and see what happens as the US markets get underway. And this was just, we've seen a lot of selling of the yen over the last sort of few hours through Far East Asia into London. This is London down here at 8 o'clock. It's what you can see now is the yen is just starting to kick up a little bit, which is suggesting that we're starting to see some buying coming into the market. In other words, buying of yen, which will be reflected in weakness in equities because the Japanese yen is one of those risk on risk off currencies, which gives us an almost direct view into the risk appetite, as indeed does the Swiss franc up here at the top, and the dollar, of course, down here as a currency of first reserve at the bottom here as well. So that's where we are in terms of the CSI, and obviously what we're looking at constantly in terms of CSI, we are looking at it from the perspective of either extremes. Are we looking at currencies which are overbought and oversold? Heavily overbought up here is the Swiss franc. We saw a strong rally in the pound this morning, but it was very volatile in terms of the trend. It was a trend with volatility up into overbought, and that's starting to come off, starting to weaken a little bit. Down the other extreme, we've had heavy selling in the New Zealand dollar, this grey line, that is starting to, it's well into oversold now, starting to rally a little bit, starting to see some buying coming into that. And really, that's the starting point. These are the currencies of the building blocks. We're looking constantly. The Forex market is one of mean reversion. It's one where currencies and currency pairs are in a constant state of flux, moving from overbought to oversold and back to overbought again. And that's really what we're looking for. It's all to do with levels and flow. We're looking at those potential areas where we can get in either as a reversal trader, where we're looking at the extremes, which is from a personal perspective where I always start, my eye is always drawn to the tops and bottoms. Alternatively, as a trend gets underway, as this starts to curl up, for example, New Zealand dollar, if it starts to climb up here, and the pound starts to fall, for example, or the Swiss franc starts to fall, that's a trend underway, and that will obviously be developed on the chart. The downside of trading reversals is that you have to set wider stop losses to allow for the buffering that is constantly going on once the currency gets to an overbought or oversold state. It's as simple as that. Once a trend's underway, the stop loss can be much tighter because the trend is in train, it's moving, and the stop loss doesn't have to be so wide to allow for any pullbacks, reversals. But when you're down at reversal trading, as you can see here with the dollar, for example, this has been here for some considerable time. But then in terms of an hourly, you might be trading this over days. So you're quite happy to be patient, wait, set wider stop losses, and wait for the trend to get underway. Because it's gradually over time, this will move. Every currency has to move. It has to move from here up to the top again, back down again, up to the top again. And it's a constant process, whether you're a scalping trader on a 1 minute currency strength indicator, for example, or whether you're trading dailies or weeklies, doesn't matter. That is the principle of the Forex market. That's how it works. In terms of the currency matrix, I've got this set up here. This is the matrix, which I showed last week. I have to say, we run these in beta tests for some time just to make sure everything's hunky-dory. As I say, this was rolled out a couple of weeks ago now, working perfectly, I'm delighted to say. Again, we're on the, what are we on here? We're on the hourly time frame here. I've got the pound alongside. This is on 5 minute, and I've got the 15 minute below. This is on cable. This is the trend that I was talking about this morning, just to pop that up full size. There we go. That's what we call a trend with volatility. I mean, practically bang, bang, bang. Volatility on almost every single candle. Very volatile, very quick. You can see how quickly it went up. The volume was really driving in there, but it's extremely volatile. And we've had more volatility as we went into the downtrend. Now we're coming back out. Now you can see the volume coming in here. We're getting towards the US session. Ton of volatility again, more volume driven into that particular candle. So we know the market makers are playing in here for sure. We just have to wait and be patient. And if we're going to jump into this long, we really want to clear all this and get away from this level, perhaps up to, once we get up to, 50, 60, once we get through 60, we're clear of that. And we've then got a very solid platform of potential support in place if we're going to trade that to long side. You can see the volume coming in here. Doesn't look terribly strong. Wick to the upper body, lots of volume coming in. So it's not a strong move at the moment, but if we clear that region, if we can get away from this region and clear that particular level up to 38.60 and beyond, then it should develop further into a decent trend higher. So that's where we are on cable. In terms of the matrix, that's why we're seeing, obviously you can see on the matrix, this is on, as I say, this is on the hours. This is quite slow. I think cable was much lower down in the water earlier on, is now climbed back up to the top. So we're seeing quite a lot of pound buying here. You can see it, pound New Zealand, pound yen, pound CAD. And the reason the pound New Zealand is at the top of that particular ladder is because if we go back to the CSI, because the pound is up here and the New Zealand dollar is down here. In other words, that has seen the strongest trend in this much slower time frame for that particular currency pair. Now, what we've also done in terms of the matrix is we've added in this feature, which we've been planning to do for a long time, and it's been requested by a lot of customers. And really, it gives you a benchmark, a sense of, once again, the overbought and oversold status, this time obviously from a currency pair perspective. When we're looking at it on the CSI, we're looking at these levels here, the 80 and the 20, to give us just an idea of when the currency is going to be into an overbought or oversold state. And what this does is pretty much the same thing. It essentially tells you the all-time high, which at the moment here is 42.78, also tells you the average. So what we're seeing in terms of pound New Zealand here is several things. First of all, we haven't even got to the average yet. And secondly, we're nowhere near the all-time high of 42.78. So in other words, whilst the currency pair is at the top of the ladder, it theoretically has some distance to go before it even gets to those sorts of extreme levels. And that's why we developed it, because it gives you a sense of this value, whether 26, 27, what does that mean in the context of overbought or oversold, because that's what everything comes back to, whether you're looking at it from the currency perspective or whether you're looking at it from a currency pair perspective. That is what you want to know, because you're constantly looking at this effect, this sinusoidal wave of when a currency pair or a currency gets to extremes, reverses, the trend develops, gets to the other extreme at the opposite end and starts to reverse back the other way. And that's what we're seeing constantly all the time. And that's why we've bolted on this feature. We will obviously roll it back onto the other platforms in due course, but as I say, once Currency Matrix is launched for TradingView, this is what you will have. And equally down at the other end, we've got exactly the same principle, negative obviously. The all-time low here is minus 40 spot 73, and the average is minus 30. So again, it's telling us a similar sort of thing. And New Zealand Swiss is minus 23, so it's not at the average. It's got a little bit of a way to go, but it could well be getting down into a potentially overbought state. And again, going back to our CSI, why is the New Zealand Swiss the weakest? Because we've got the New Zealand dollar down here, and we've got the Swiss franc up at the top here. And that has been a solid trend and is now the weakest at the extreme, and therefore potentially we could be looking at an opportunity to trade that as a reversal. So that's the currency matrix. Absolutely delighted that we've got that up and loaded. And right hot off the press, just continue to click on there, is the currency array. Again, this is on a faster time frame. This is on 15 minutes. And what the array tells you is several things. First of all, it gives you a sense of the strength of the trend. Visually, you can see here the pound New Zealand at the top, New Zealand Swiss at the bottom. Why are they at the top and bottom? Because, as I said earlier, you've got the pound at the top on the CSI, you've got New Zealand at the bottom, and you've got the Swiss franc at the top. That's why those currency pairs have been exhibiting the strongest trend. And they are ranked down here on the currency array. And in addition to that, and also you can see here the Swiss franc, that's why we've got this grouping of Swiss franc down here, because the Swiss franc is very strong at the moment, certainly on the sort of faster time frames. But then equally down the right-hand side here of the column, the second column, what this signals is whether a currency pair now, it actually gives you a signal as to whether a currency pair is approaching or at an overbought or oversold state. And what we're seeing here right now is the fact that the Aussie New Zealand is actually at a potential overbought state, purely because it now appears in bright blue with the brackets removed. When these are approaching these conditions, then they will appear with brackets around and a darker color. So at the bottom, you would see bright red. At the top, you'll see bright blue, or you'll see a darker blue with brackets, or a darker red in brackets at the bottom when it's approaching an oversold condition. I use the word potentially because that's all it is. It's just giving you a heads up that potentially this particular currency pair is now reaching a condition where you might consider it for a reversal opportunity, or once that reversal opportunity has got underway, considering as a trend opportunity. And that's really what it's about. It's about scanning the market. It's about each of these indicators you can think of as a scanner in their own right, the CSI, the matrix, the array. The matrix works very close to the market, so it's a very precise indicator. The array takes a more considered view, steps back. You can think of it actually like the trends and the trend indicator. Trends indicator works very close to price action. The trend monitor takes a more considered view, and it's similar sort of principles with these two indicators between the currency array and the currency matrix. So there we go. Those are the indicators that we're developing at the moment. As I say, we've got the currency heat map coming along very soon, and that will be followed by the others as well, the volume point of control and also support and resistance. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got two versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine. We do that for you. Absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out, you never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView because, as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with the full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckofffian principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now.